Let's get out to Charles Chaw, Managing Director at China Knowledge Press. He joins us in our Singapore studios. Charles, good to have you with us. How far will the tax reductions go in helping to boost market sentiment?
The 50% reduction from 20% on dividend to 10% is just one of the small steps they will do. As you can see, for the past 2-3 years, the central government or the Ministry of Finance, People's Bank of China, are injecting billions into banks which have problem loans. And just to give you 2 examples, Bank of China will receive $22.5 billion US dollars to help them ease bad loans problem. And then we have construction bank, agriculture bank. I mean, the top 5 banks will get rescues.
The government is also undertaking a lot of other measures to help boost market sentiment. One of them, of course, is reforming state-owned shares. How significant is this move? Okay,
the biggest problem of China's stock market is the big up and down. Like there was one particular day last week, 8% up, and today it's slightly down.
There's a lot of volatility.
Volatility, yes. I think one of the big problems is liquidity. And as an investment banker, as an investors or the fund manager, liquidity is the most important. And let's look at the market as whole. Shenzhen and Shanghai, total market cap about 400 billion. Only 1/3 is tradable and 2/3 are not tradable. Now the government is not selling the 2/3, okay? But what they're trying to do is improve liquidity, and there's no way that they want to let go of the shares. But improving the liquidity would attract more interest. And this is another step taken to open up the market. Right now we have the A shares and the B shares. It's just a matter of time you'll be open to foreign investors.
Okay, improving liquidity is one thing. In the past, we know that minority shareholders used to bear the brunt of falling share prices. Is that going to improve?
Of course, I know many investors in Shenzhen and Shanghai, the public, they were disappointed with, for the past 4 years, from a 2,000 level to like now half or 50% discount to what they have invested. The government doesn't like that. And one way to rescue the market or to improve the market is to allow liquidity and foreign participants. Now, before allowing foreign investors to come in, they need to, first of all, reform the banks, which they are doing now. And secondly, is to let go some of the non-tradable shares and allow them to trade in the market. And that would attract even big M&A activities in China. Yeah.
Now, we know that transparency in the China markets is another issue altogether. I mean, what steps are you seeing that the government is taking to improve that? And what steps do you think the government should take?
Okay, some of the steps that they've taken were very generous and, to me, very radical. Just 2 weeks ago, when they allowed the 4 non-tradable shares to trade, Sunny Heavy Industry. Now, this is what is the reform about. Every 10 shares a public own, a shareholder owns 10 shares, will get 3.5 shares in return for 8 yuan, Chinese renminbi. And they are not increasing the shares. They are transferring non-tradable shares and give 3.5 shares to a person who owns 10 shares. And that is a sign of how serious the government is trying to improve the market. Yeah.
What else do you think needs to be done?
I guess to improve more, the banking sector is a key issue. All right, and then there are issues of pegging renminbi to a basket of stocks, including euros. These are the considerations. I think they are working towards that. And it's a matter of time, the market will improve. And longer term, it will definitely be upside.
There's a lot of talk about yuan revaluation. We know that the renminbi will appreciate at some point. Whether that time comes, we don't know. But are you seeing investors plowing into China shares just to take advantage of that appreciation in future? Yeah.
There's this qualified foreign institutional investors. The money the funds that Palmi was supposed to buy into the local stock market and also the T-bonds. Now, some of these funds are waiting for depreciations of the currency. So by investing in, not only benefit from the stock market, but also appreciation of the renminbi.
So there are positions being taken.
Yes.
You talked about banks earlier. I want to ask you about Bank of Communications. We know in Hong Kong there's a lot of hype about Chinese IPOs coming on. Bank of Communications is one of them. What are your thoughts on that IPO?
The government is seriously going to make it a success because it's one of the 4 major IPO issues for banks. And I'm confident that there's already indications that the oversubscription and the share price should move up. And the pricing for that shares between $9.95 to $2.55, I think they'll price it at the lower side just to hope that you'll perform over.
Do you think there's too much hype surrounding these China IPOs, especially the banking sector? We know that problem loans is still a big problem.
Like I said earlier, the government is already injecting funds to save or to reduce the problem debts or the troubled loans, and I think that kind of investments is enough to soothe or to at least reduce the problem.
Okay, all right. Charles, we'll have to leave it there. Thank you very much. Interesting discussion. Good to have you on the show. I've been talking to Charles Chaw, Managing Director at China Knowledge Press.